Hello learners, welcome back. Now today's lesson, we are going to continue looking more into questions on financial statements. In this question today, as you can see, we are given a margin, unlike the previous one where we were working with a markup. So learners, before we proceed, please, if you're watching this and you've not subscribed, kindly do so, like and comment on the areas that you'd want us to discuss in this platform. Now, the question reads, the following information was extracted from the books of Marigi Traders on 30th June 2009. We are given items there: purchases 720,000, opening stock 165,000, closing stock, learners, we are not given. Sales is 980,600. Margin is given as 20%, and we are supposed to prepare a trading account of Marigi Traders for the year ended 30th June 2009. So where do you start? The heading, whereby the heading must always start with the name of the business. Marigi Traders, or are you preparing a trading account? Period. For the year ended, 30th June 2009. For the year ended 30th June 2009. Then after that, you draw a capital T. Yes. So we move on. Always we start with the opening stock of the business. Opening stock, where you're given opening stock as 165,000. Then we add the purchases. And our purchases, we are given there as 720,000. So this gives us 885,000. Clearly looking at the question, we don't have any carriage inwards. We do not have any purchases returns. Therefore, this figure is going to be our cost of goods available for sale. Cost of goods available for sale. So, cost of goods available for sale, to arrive at a gross profit, we need to get first the cost of goods that were sold. And for us to do so, we need to less closing stock. And learners, at this point, remember, we are not given the closing stock. So that is where we start, using the margin. Now, margin learners, we said is given by gross profit divided by the sales. We are given the sales figure, we are given the margin. So what we don't have is a gross profit. So our gross profit now will be equals to margin. Our margin we multiply by our sales figure. So our margin is 20%. 20 is the percent is the same as 20 over 100 expressed as a fraction. Multiply by our sales figure up there. Our sales figure is 918,600. Yeah, and this gives us, multiply the two. Have that and that, so you have 20 times 9,806. This gives us 196,110. 196,120. So learners, this is our gross profit. This is our gross profit. So how do we use the grossing profit to arrive at the stock? Now remember, once we subtract closing stock from the cost of goods, available, we always arrive at cost of goods sold. Cost of goods sold. Cost of goods sold that we do not know, then cost of goods sold, then how do we get gross profit? That is the biggest question. How do we usually arrive at the gross profit, learners? Remember, gross profit is arrived at taking the net sales and subtracting the cost of goods sold. Sales subtract cost of goods sold. That is how we arrive at the gross profit. Remember, already our business got a gross profit of 196,120. Therefore, arriving at the cost of goods sold in this case will be easy because we have that and we have that. So cost of goods sold, learners, now will be equals to the sales. Yeah, we have that. That's what we are doing, minus the gross profit. Sales minus the gross profit. And therefore, learners, our cost of goods sold will be 980,600 minus 196,120. So we subtract those two, we arrive at 784,480. And learners, this is our cost of goods sold. Cost of goods sold. So we can move on and feed. So gross profit, we were able to get 196,120. Then cost of goods sold, we have it. We've calculated, remember learners, we've calculated the cost of goods sold as 784,480. Yes, done. So we are left with one unknown, which is the closing stock, learners. So normally we say cost of goods available minus closing stock gives us cost of goods sold. Meaning what? That we can arrive at the closing stock. This is what I'm saying. That cost of goods available minus closing stock always gives us cost of goods sold. We have that, yes, we have that, and also we have that. So we have one unknown, and therefore our closing stock will be cost of goods available. Yeah, we have that for easy remembrance. We have cost of goods available minus the cost of goods sold. So this, learners, gives us a cost of goods available. Back to our question, cost of goods available for sale is 885,000. We subtract cost of goods available, learners, is here. We've just calculated as 784,480. And learners, we are getting, our closing stock as 100,520 shillings. Therefore, learners, that is it. 100,520 is our closing stock. So we did not put the sales here, sales figure, which were given as 980,600. And learners, that's it. We are done. 980,600 is also our balancing figure. Yeah, that's how you're supposed to learn to tackle that question. Yes, that is it. You use the margin to get gross profit. Then from there, you get the figure for the cost of goods sold, yeah, by subtracting gross profit from the sales figure. And also you use the same cost of goods sold, yeah, to arrive at closing stock by subtracting it from the cost of goods available. And learners, that is how you're supposed to arrive at your answer. We have everything and the question is fully answered. Learners, please remember to subscribe if you're watching this and if not subscribed. Thank you. Bye for now.